Hi, I'm James Robinson, and this is my stock pick of the week. This video is my year-end review for what happened in 2020. I'm a big believer that the achievements and results that you got today were the output of effort that you put in the past. So what you've done in the past is what leads to today's results. And so I really want to measure myself first and foremost over whether I did the work. Am I continuing to put in the time to analyze these companies and do the homework? And if I am, then I think in the long run, that homework will yield results that hopefully are good. So for the year, I researched 114 companies. That's more than I did in 2019 when I only managed to look at 89 companies. So that's a nice size improvement. About a third of the companies that I looked at and analyzed, I had previously considered in the past, but the data that I had analyzed was outdated. It was 2 or 3 years old, and the company popped up on my radar as something that might be underpriced now. And so I went back and redid the initial research to find out if it was. And that was, again, about a third of the companies that I looked at. To date, as I did in my last video, I've investigated 1,000 companies to date. My goal is to do 250 companies in 2021. Again, that's a very lofty goal, but you got to set goals that are high, right? While I've analyzed 1,000 companies, sadly, my current universe investments of companies that I might look at are only 895 companies. Because I had to delete all of the companies that are no longer being actively traded, whether through bankruptcy or merger or delisting or whatever might have happened to the companies. So just under 25% of that number, just around 190 companies are good enough that I invest in them at some price. And my goal is to reanalyze every company of those 190 that I haven't looked at, whose initial analysis is more than 2 years old. So if I haven't looked at them since 2000, if I looked at them prior to 2019, I'm going to redo the analysis. And that's part of why my goal is to get to 250 companies. So before I get too heavily into my analysis and my results for the year, I just want to talk about 2020. It seems to me as I look back on it, and I've taken the last week and a half, 2 weeks, and really thought about it, that 2020 had 4 phases. The first quarter of the year was sort of business as usual, right? If you can remember, up until March, really nothing was going on with COVID. It was sort of this thing that was percolating out in China and starting to take place in Europe, but it wasn't really hitting us here in America very seriously. And so it was business as usual. And if you remember at that time, I had felt the market was a little bit overpriced, perhaps not badly so, but I was having a lot of trouble finding really good investments. And I was doing a lot of hit and run where I'd find a company that I thought was undervalued, I'd buy it, it'd go up 15, 20, 25%, I'd sell it, take my profits, and go look for another company. The second quarter is when the world's worst pandemic since 2018 came in. For us in America, at least, we started seeing these videos of body bags in Italy, worldwide shutdowns, the Champs-Élysées having no cars on it, and London shut down, and then New York and no cars on the I-5 in California. And it was really, really eerie. And at one point, I believe at some point in that quarter, I was down 30% for the year. I mean, it was really, really bad. And I started taking evasive action. I sold in June, I sold virtually every position that I had. And I did that for 2 reasons. I did that because, again, this was Armageddon. Nobody knew what was going to happen. But I also did it because in my own business, in my own life, my business really, really was getting hurt. I do commercial real estate for a living, and I typically do 1 or 2 deals a month. And really between March and October, I didn't do a single deal. The year ended up working out okay for me financially, but I had all this money tied up in the stock market, and I thought I might need that to survive, right? It might be that bad out here. And so while it perhaps was a bit of a panic or an overreaction, I don't have enough of a buffer to say, too bad, too bad, I'm going to stay invested, I'm going to stay the course. I had to take some evasive action. I have a family to take care of. And so, it was a very interesting time. The third quarter is when the market realized that COVID, while it was bad, maybe wasn't, going to be the end of us. And during that quarter, the stock market sort of bounced back. And for most of that quarter, I was down, I was down 10% at one point and up 7% at one point, sort of bounced around in there. If you remember, the market sort of gyrated. The fourth quarter, we saw an ever increasing stock market, Elon Musk's Tesla is up to, I don't know, $700 a share or something. Apple's trading at 40 times earnings. And I really think that this is becoming a period of irrational exuberance. I still think the market, the economy, the world economy is a little bit wounded. I know that my friends who own small businesses, they don't feel like this is an all-time high economy, but the market seems to think it is. So I'm nervous about that. I'm still about 50%, 45% cash, and I'm not, in a real hurry. And by the way, I can't find anything that I want to buy even if I wanted to get invested. So that's sort of my breakdown of what happened in 2020. The first quarter was pretty normal, slightly overpriced market. Second quarter was panic due to the pandemic. The third quarter was a sort of recovery, and then the fourth quarter, and now going into the first quarter of 2021, things seem like they're a little bit overpriced. If you remember in 2019 in my year-end review, I said that I was going to start to treat this as if it was a hedge fund. I was going to create $150,000 and behave as if that $150,000 was a hedge fund. And for me, it was a tremendous learning experience because I had this constant goal to beat the market. And I know that's what hedge fund managers have. And I also had this goal to preserve capital, which for me was my investors' capital. In this case, it's all mine, but I behaved as it was my investors. And I had to really balance that. Should I be all in cash? If I do, I'm going to have trouble keeping up with the market. Or should I be fully invested so that I can outperform the market? And I, kind of recognized that the right thing to do was to find, if you could, spectacular buys. And if they weren't spectacular buys, to have your money more in cash than you might otherwise have. So it was a great learning experience. I learned a bunch, and I think I'll be a better manager and a better investor because of it. My goal is always to beat the S&P 500. In that, I did fail, but really only marginally. And it was a conscious decision to fail. Again, as I've talked about in previous videos, for some significant part of the year, maybe a quarter of the year, I was 75% cash. And for the last 3 quarters, I've been roughly 55% cash. Well, when you've got that much in cash, not earning returns, and the market is going up, it's hard for you to compete with the market. And I actually did. The market only barely beat me by a little bit. But I felt like I reduced the risk to my portfolio by 50% by being in cash. And so I'm comfortable with the decisions that I made. I wish I had been smart enough to stay 100% invested. I'd have done great, but I'm not uncomfortable with my results that way. The other good news that's come out of this is I have bought some very, very, very good companies. I've done this analysis of 1,000 stocks, and I was able to buy 3 or 4 of the top 5 and maybe 6 of the top 10 companies of that 1,000 because their price got low enough during the pandemic that I could buy them. I'm going to talk about individually with my stocks in a couple of slides, but you'll see a couple of positions I've got are up over 100% for the year. A couple others are 50% up for the year. But there's some losers too. So I was able to earn 14.09% for the year. The S&P 500 was up 16.03% for the year. I earned dividends for the year of 3.39%. The average S&P dividend was 1.81%. So I managed to beat the S&P there. And again, to earn 3.39% in dividends when 50% of your money is earning you no dividends, I'm very, very proud of that. So long story short, I think we did okay for the year. I'm not upset with it. We didn't lose money. We struggled through a really crazy time, and generally comfortable with that. Here you can see my closed positions, and in the past when you look at my positions, they tend to be a lot more green than red. Here it's a relatively mixed bag. In fact, in my positions in which I closed, I actually lost $3,000, so about 2%. Again, it is more than balanced out by the gains that I've gone on the positions that I still hold. But looking at this, what you'll see is that on June 10th, 11th and 12th, I had an almost complete capitulation where I just sold basically everything. And that was because the market had recovered. The pandemic was going on and the market had started to recover, and I was even or up a little bit. And I just felt like it was the market was coming back too fast and we didn't know enough yet. And so I got into, I think at this point I was 75% cash. But again, if you start to look at the end of the year, my results start to pick up again. The last 5 positions that I closed were all up, and then you're going to see in the next slide that generally everything I have currently in my portfolio is a profit. This is the my current portfolio, and you can see here that I have 15 current positions, which is pretty typical for me. It's about the right number that I like to have. The good news is 14 of those 15 positions are positive. One position they have is down, but it's down 1%. And by the way, it's January 10th or whatever when I'm doing this, and that position is currently up. So currently, I think I'm up in every position. Some notable positions, Ventas, I'm up 144%. Children's Place, I'm up 159%. What else is exciting? 57%, I'm up Paycheck, I'm up 57%. SEIC in one, I bought it a couple of times, but I'm up 37% in some of those. So I've got some really good positions, and some of you have criticized me in the past, and maybe justifiably so, that I tend to hit and run a lot. I buy a stock and then I sell it. You'll see that some of these positions I'm up significantly and I haven't sold, and I don't really intend to sell some of these positions because I just think they're fantastic companies and I bought them really, really cheap. But so long story short, when you look at this, you'll see that this is where I'm up the 14.93%. That includes the losses in the last slide, which includes losses for closed positions. So again, very happy that I ended up the year positive in what could have been a really bad year. Comfortable that I did that while preserving 50% roughly of my cash of my possible investments in cash, and thus reduced my risk for what theoretically might have been my shareholders or my investors. And I learned a bunch this year, did a bunch of research. I think I became a better investor in 2020. And so now looking forward to trying to kick butt in 2021. I mentioned that I bought a stock. I recently bought a position in Snap-on. I'm not going to do a video on that because I've already done a series of videos on Snap-on. And that's one of the problems with the YouTube videos, is they take a long time for me to make. So if you want to know real time what I'm buying and when I buy it, the best way to do that is to follow me on Twitter. My handle is @RobinsonStocks. You get real time information on my trades, get updates when new videos are being posted, also news and thoughts on the market and stocks in the portfolio, et cetera, et cetera. Also, again, I want to thank all of you who have followed me. I've up over just about 300 subscribers now, especially the last 6 or 8 weeks. It's really done really well in terms of growing the numbers. So thank you very much for subscribing. Thank you very much for watching. For those of you who've taken the time to let me know where you're watching from, I think I've got this map up to date with all the videos. You'll see that I flipped the map around. I did that on purpose, and I put the Europeans and Asians on the left-hand side because I just get tired of the Decatur projection, which is always the other way. So I screwed it up to put you guys in more prominent positions. So thank you everybody for watching. I really do appreciate it. Thanks for your time, and I wish you all happy investing in 2021.